Good morning. Welcome to today's edition of the Mortgage Market Advisor. It's February 18th. Let's get started. So here's what we got. Mortgage-backed securities are trading a little bit better today. This is after some pretty hard selling off over the last 4 trading sessions. Currently, bonds are trading at about $102.19, which is the best since about April of 2015. And reports are coming out that are a little bit bond friendly today. So we're seeing the German bond yield at 0. That's pretty crazy, guys, a 0. So if you're an investor and you're investing in the German bond, your return is 0. So obviously, what would you do with that investment? Pull that money out, right? So Japanese bond is at 0 as well. In fact, for the first time since it's been recorded in the year 2000, the Japanese bond is at a negative yield. So that means investors that have their money in the Japanese bond right now are actually paying to have their money invested. Nobody likes to pay to have their money invested. So investors are pulling out there. There's obviously a lot of deflation going on in those countries. We are also seeing a weakened US dollar. Not good for our economy, but it is good for bonds because there is speculation that the Fed will not increase the short-term rate for a while like they were previously planning. That's good for us, but it's also good for other consumers that have credit card debt and, for instance, a home equity line of credit. Those debts or those interest rates on those debts are at least going to stay low. So why are we seeing, with all of this great news, why are we seeing still kind of a sell-off and the bonds not improving? Well, as mentioned in previous videos, we are still seeing a little bit of investor profit taking. So the new support level that we're likely going to see is right here. If you look at my mouse, at about $102. So if investors do take some more profit, and to let you know why do investors take profit? Well, it's pretty simple. If similar to a stock, the goal is to sell it high and buy it low again. And so that's what investors did. We were on an upward trading channel, they sold high, and now they're starting to rebuy low a little again. It's not to say that it won't happen again. So our next support level is about $101.30, but both investors think that we're going to stay neutral, and we're probably just going to trade flat for a while. To quantify what's happened with bonds since January 25th, if we go back to January 25th over here, bonds are trading about $1 better. $1 better means if you were going to get a mortgage, you were getting a specific interest rate on January 25th, and you were to get one now, you could get that same interest rate for a point less. So pretty nice. And as far as the analyst outlook, both Dan and Neil are maintaining a neutral stance. They both agree. And if you'd like more information on what's going on with the market, or an idea of what a mortgage payment would look like or a refinance would look like, my contact information is here. If it's your first time on the channel, love for you to subscribe. By subscribing, it'll keep you updated on what's going on with interest rates as you're kind of contemplating whether or not to purchase or refinance a house. Always a good idea to keep an eye on that market. And as far as this video, did it not make sense to you? If you were scratching your head going, huh? What the heck does this mean? Click this link at the top right. This will take you to Mortgage Bonds 101, and it'll give you a great description on how the trading of these mortgage-backed securities affects you and the mortgage that you get. So, as always, please be sure before you end the page, hit that like button. We would love to be liked, and who doesn't like to be liked, right? And if you have any comments or questions, leave them below. I reply to all comments, all questions, so don't hold back. Anyway, take care, guys. Have a great week.